Happy New Year, everyone! It's Joy, and welcome back to QMIC Weekly, where we bring you the latest Chinese steel prices and market trends every single week. If you're new here, simply hit the subscribe and like buttons right here. Don't miss out on any future updates. This week, the steel market in China continues trend of weak fluctuations. Let's look into more details. As we mentioned earlier, the overall inventory remains relatively low and there's no major imbalance in the supply and demand dynamics. However, the continuing weak demand is proving to be a significant challenge, leading to a deficient momentum for steel prices to go up. But while steel prices are holding steady in this narrow range, the raw materials market is under even greater pressure. Supplies of iron ore and coking coal remain abundant, with coking coal barely holding its prices. Domestic coal production is operating at high levels, and imports of Mongolian coal are also strong. This combination has led to a significant decline in coking coal prices, creating downward pressure that cannot be ignored. With raw material costs weakening, the support for steel prices is also diminishing. As a result, steel prices are going toward the lower end of their current level. Next, let's examine the supply and demand side. This week, China's apparent demand dropped by nearly 300,000 tons, reaching its lowest level in over 4 months. At the same time, total inventory rose by 63,000 tons, and the production fell again. Fortunately, production has declined for 6 weeks in a row. What does all this tell us? Even though production is falling, demand is dropping even faster. That's why the market continues to feel stuck, with neither supply nor demand strong enough to shake things up. So what's next for the market? Looking ahead, steel prices seem unlikely to find much support in the short term. Both macro factors and the supply-demand dynamics are not enough to drive prices higher. In fact, with raw material costs likely to fall even further, the market is expected to stay in this pattern of weak fluctuations for a while longer. However, there are a couple of key things to watch out for. First, keep an eye on coking coal prices. Will they stabilize or continue their downward slide? Second, pay attention to how quickly steel inventories build up. If inventories start to grow faster, it could put even more pressure on prices. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye.